Have you ever found yourself as an Amazon seller, staring at a booming sales trend, only to realize you're bottlenecked by inventory? Or perhaps you're eyeing a new product line, but the upfront capital feels like scaling Mount Everest? For many Amazon sellers, the dream of expansion often hits a wall. Financing. Traditional banks can be slow, demanding, and often not equipped to understand the unique ebb and flow of an e-commerce business. That's where Amazon Lending steps in, offering a potentially powerful solution. But the burning question for many is, what are the typical loan amounts offered by Amazon Lending? First, let's set the stage. Amazon Lending isn't your average bank loan. It's an invite-only program, meaning you can't just apply whenever you feel like it. Amazon proactively offers loans to eligible sellers based on their performance on the platform. This invitation-based model is a key differentiator, and it speaks volumes about how Amazon assesses risk and extends credit. They leverage their vast trove of data on your sales history, customer satisfaction, inventory levels, and overall account health to determine not only if you're eligible, but also the specific loan amount they're willing to offer. So, what are these typical loan amounts? While Amazon doesn't publicly disclose a strict, universal range, reports from various sellers and financial analyses consistently indicate that Amazon Lending offers typically range from $1,000 to $750,000. That's a pretty wide spectrum, right? And it highlights the tailored nature of these offers. A smaller, newer seller might receive an offer for a few $1,000s to help with seasonal inventory boost, while a well-established, high-volume seller could see offers approaching the upper end of that range for significant expansion projects. It's important to understand that this $1,000 to $750,000 range isn't static. It can fluctuate based on several dynamic factors, and these are the elements Amazon's algorithms are constantly evaluating. Let's break down the key determinants. 1. Your sales performance and history. This is arguably the most critical factor. Amazon wants to see consistent, healthy sales. The longer you've been selling on Amazon and the more robust your sales figures are, the more confident Amazon will be in your ability to repay a loan. This isn't just about raw revenue. It's about sustained growth, predictable sales patterns, and a low rate of returns or cancellations. A seller with a strong track record of increasing sales over time is much more likely to receive a higher loan offer than someone with erratic or declining sales. 2. Account health and customer satisfaction. Amazon's ecosystem thrives on positive customer experiences. If your seller account is in good standing with high ratings, low order defect rates, and prompt customer service, it signals reliability and a well-run business. Conversely, a history of customer complaints, policy violations, or a high number of negative reviews can significantly impact your eligibility and the amount you're offered. Amazon views a healthy account as a direct indicator of your business's overall stability and its capacity to manage financial obligations. 3. Inventory levels and management. Believe it or not, how you manage your inventory plays a role. Amazon is interested in helping you sell more on their platform. If you consistently maintain optimal inventory levels, avoid out-of-stock situations, and efficiently manage your supply chain, it demonstrates your operational prowess. This, in turn, suggests you're a good candidate for a loan designed to purchase more inventory and fuel further sales through Amazon's marketplace. The funds from Amazon Lending are often intended specifically for inventory acquisition to be sold through Amazon. For business longevity on Amazon, while new sellers might get small offers, established sellers with a proven track record over several years tend to qualify for larger loan amounts. Amazon values long-term partnerships and stability. If you've been consistently selling on the platform for a year or more, it builds a history that Amazon can analyze, giving them more data points to assess your creditworthiness. 5. Repayment history. If you've had previous Amazon loans, if you've taken out Amazon Lending loans in the past and repaid them promptly and completely, that builds immense trust. A stellar repayment history demonstrates financial responsibility and significantly increases your chances of receiving larger and more favorable offers in the future. It's like building a credit score specifically within the Amazon ecosystem. It's also crucial to remember that Amazon Lending is not a one-size-fits-all solution. There isn't a publicly available interest rate or fixed set of terms that applies to everyone. Instead, each offer is customized, When you receive an invitation, it will detail the specific loan amount, interest rate or fixed fee, and repayment terms. This is why it's always recommended to carefully review any offer you receive and compare it to other financing options available to you. Speaking of repayment, Amazon lending loans are typically short-term, with repayment periods often ranging from 3 to 12 months. The repayment structure is designed to be convenient for Amazon sellers. A fixed amount is usually deducted automatically from your Amazon Seller Central account on a regular basis, often daily, weekly, or monthly, until the loan is fully repaid. This automatic deduction streamlines the process, but also means you need to maintain sufficient sales to cover these repayments. If your Amazon sales don't cover the automatic payment, Amazon may deduct the outstanding amount from your linked bank account. While the typical range is $1,000 to $750,000, there have been instances, particularly with new credit line partnerships, like those with Goldman Sachs, where offers for U.S. sellers have reached up to $1 million. However, these are often for lines of credit rather than traditional term loans and are subject to specific eligibility criteria and partnership terms. The core Amazon lending program generally sticks to the aforementioned range for its direct loan offers. It's also worth noting that the funds from Amazon lending are generally intended to be used for business-related purposes, primarily for purchasing inventory to sell on the Amazon marketplace. While the exact restrictions aren't always explicitly detailed, the underlying philosophy is that these loans are meant to fuel your growth within the Amazon ecosystem. This can be a pro for sellers solely focused on Amazon, but potential con for those looking to diversify their sales channels or invest in non-Amazon specific ventures. So, if you're an Amazon seller looking to expand, keep an eye on your Seller Central account. Maintaining a strong sales history, excellent account health, and efficient operations are your best bets for receiving an invitation from Amazon lending. And when that invitation arrives, you'll likely be looking at loan offers within that $1,000 to $750,000 range, with terms tailored to your specific performance and potential. Understanding these typical amounts and the factors that influence them will empower you to make informed decisions about your business's financial future. With that said, thanks for watching, and until next time.